Hello there, Maverick Traders. This is Imri, and welcome to today's currency recap. It is October 13th. Well, what an interesting day in the markets. We got an incredibly hot inflation report coming out of the US, much hotter than expected. And predictably, the markets absolutely sold off. I mean, dollar was bid, equities were offered, crypto sold off, Bitcoin cracked that big $19,000 support level, and then everything turned around. And I say this all the time, bear markets will not end on good news. Bull markets don't end on bad news. Typically a bull market will end on good news, and it's only till the bear markets, really in the heart of the bear, that we start getting bad news. Well, not the heart of the bear, but relatively early on. But markets typically never top on good news, and they typically never bottom on bad news. I'm talking about large degree market cycles. So I'm not saying necessarily that we have put in the bottom, but when I take a look at this daily candle here on the far right on this S&P 500 chart, I mean, that is the most impressive daily candle I've seen in a long time, and it occurs off the back of some bullish divergence here in the relative strength indicator. Now, longtime listeners or viewers know that I am an Elliott Wave market analyst, right? So as an Elliottician, I can offer some context for what we're seeing here. And what I've been calling for from an Elliott Wave perspective is one more new low below 36.39. We satisfied that requirement a little while ago, actually, earlier in September, but I was thinking privately at the time that that's probably not enough of a decline and we need to go a little bit further. And in fact, my downside target initially was quite a bit lower in the S&P. So I'm not saying we've bottomed. I definitely still see a door to lower prices in all the major market averages. But, a candle of this size, such a bullish intraday reversal leaves me taking a bit of a step back from my immediately bearish view and saying, well, let's wait and see what happens. Of course, moving average resistance is not far from here, and typically between the 20 and 50 period moving averages is going to be a fight. So let's wait and see what happens over the next couple of days. But, I would not be surprised if this bullish move has some legs underneath it, and we rally possibly to close out the rest of the month, and then we'll have to wait to see what happens in November, right? So I'm just putting that out there, all right? I know this is the daily recap, but I just want to give you some thoughts based on my methodology, my analytical methodology, and what I'm seeing right now. Okay, so moving on to the total world stock index, it's very similar, all right? I mean, we have a large bullish candle. We're approaching moving average resistance, very similar to the S&P chart. The crypto chart is interesting. We're still trading on support. And typically when you knock on the door this many times, you're going to break through it, but we haven't broken through it yet. So there's obviously a lot of orders in the crypto markets, right around these support levels, a lot of limit buy orders, that is. So let's see what happens. It's a war of attrition right now. Either sellers are going to exhaust themselves and all those limit orders are going to soak up that selling pressure and we're going to see price head higher, or the limit orders, the buy limit orders will exhaust themselves and we're going to see a break of support. When we're trading, and I don't see a reason to buy crypto personally, even on a short-term trading basis, at least not through IB. I think it would be a fairly risky trade, but I can't believe I'm saying this. If there ever was a time to start looking at crypto markets, and I mean on a short-term basis, guys, I'm not saying weeks or months of holding. I'm really saying a day or three at the most. Now might be the best time to buy it that I've seen in several weeks. So I'm just throwing that out there. I'm not going to be buying crypto myself, but man, looking at this bullish candle here with that long wick, and also taking into account the fact that I think equities might rally now for at least a few days and possibly to close out the month, there could be something there in crypto for us currency guys. I'm, just given the day's action, look, I know the moving averages are sloping lower and we're trading below them, but given the sharp intraday reversal, I'm shifting my market outlook to neutral for the time being, and we'll just have to wait and see whether that nudges back into negative territory or if bulls can push this market into positive territory further. Tomorrow, we do have some high impact news coming out, consumer sentiment, retail sales as well. Both of those are indirectly inflationary reports. The inflation report today was hot, really hot, and that really pours cold water all over the idea that the Fed's going to pivot anytime soon. So I think we're going to see that 75 basis point hike again next month. And the question is, are we going to get another 75 basis point hike in December? The Fed's been on one of its most aggressive tightening cycles ever, I must say, and it's hardly making a dent in the inflationary data that we're seeing coming out. Now, how high do we have to go? Where's the terminal rate going to be? These are all questions that the market is asking and desperately wants answers to. Now, I don't like playing that game. I like to play the game of focusing on the price chart and seeing what short-term setups we have. That's, I think, our edge as traders. We don't need to be putting on positions worth tens of millions or billions of dollars. So we're nimble, we're agile, and I think we should use that to our advantage. So whether the terminal rate ends up being close to where it is or much higher, I don't really care from a purely trading perspective. What I care about is that we have volatility and that we can monetize that volatility so long as the appropriate setups continue to materialize. Now, moving on to currency analysis, interesting day in crypto. Like I mentioned, we saw big intraday reversal in Bitcoin, but the other cryptos, as I'm recording this, they've also made large intraday reversals, but other than ETH, they're all still in negative territory. Again, as I said, as I'm recording this. Not too much interesting here. If you had to buy anything, I'd look at Bitcoin and Ethereum personally, but I find the fiat currency is a lot more interesting right now. Pound, clear winner on the day. Euro, second place. Losers, the safe haven currencies. Dollar, SWISD, and the yen. Very interesting. So we're going to take a look at velocity and then some potential trades by looking at some currency baskets. Basically, we've got the pound and the euro showing signs of high positive velocity, and the SWISD and the yen showing signs of negative velocity. So those are kind of the pairings I'd want to be looking at, but I'll give you some updates, as I like to do week by week, on some of the stuff that we've been looking at together as well. So possible trades. Let's take a look. First off, I just want to take a look at the euro. So I've been calling for a break below this support area here for quite some time, several weeks actually. We've gotten it. Do we need to go any lower from here? No, I think it's possible that the Aussie's close to putting in a bottom. We have oversold conditions in the relative strength index, and we're getting some large indecision candles now. I think there's going to be a lot of buying pressure right where we're trading right now. So I'm looking for a potential bottom to start forming in the Aussie dollar, which is really interesting because we haven't seen that materialize since really the earlier months of the year. So let's see what happens. If we do trade any lower, then we're looking, at this level here in the Aussie basket. We have support here from June of 2020, October 2020, August 2021, December 2021, and earlier this year in January. So a major support level coming in here around 75 in the Aussie basket. Okay, next up is the euro. So we're trading right now we're coming back into resistance. I think the euro is probably a sale up around these levels against possibly the pound, but the issue is that the issue is that the velocity on the euro is not sharp enough, either positive or negative, for me to really seriously consider looking at a trade. I just wanted to alert you to the fact, that we're trading back into what ought to be quite stiff resistance in the euro. As far as the pound goes, I alerted you guys to this trend line last week and said, hey, if we bust out of it, the pound could have some escape velocity, and we certainly saw that today. The next area is fairly minor resistance. And I honestly, I expect the pound to be pushing its 2022 highs possibly before the end of the year. Now that's a pretty aggressive forecast to make, and it would be a huge reversal in the pound. But that's what I'm seeing from both an old school classical technical analysis perspective and also from my preferred market analysis methodology, which is Elliott Wave. And then moving on to the yen, been calling for, not calling for, but I've been saying that this is typically a reversal pattern. Momentum in the yen looks quite negative for now, however. So while I do think the yen is going to reverse out of here eventually, I do think we need a little bit of a push lower in the yen basket. So I think there's might be a couple days of selling yen before I'd say that trade gets overly crowded. And then ultimately my expectation is that we're going to break out of this diagonal structure. Kiwi, right? I was saying for the last few weeks that we're going to probably test this supply region down here, the April 2020, May 2020, March 2020 block of orders down here. Well, I don't see any reason to buy the Kiwi, but this is where I'll be looking very closely to see whether or not we can stage some kind of power reversal to the upside. And then finally, the dollar. Okay, so we've tested all the levels I've called for, and quite frankly, the dollar's exceeded every expectation I've had of it, from a forecasting standpoint. Where do we go from here? Well, I do think that dollar strength is not over yet in the big picture, but in the intermediate term, I think we're approaching a significant top that could see the dollar lose roughly 10% of its value from, 10% was a big call. Maybe closer to 6% from current levels in the basket, which would be a big move in the actual currency pairs, by the way. So I think we're approaching a shift where the dollar is going to, at least for some time, reverse course and see its fortunes fall. But as always, we have to wait for technical confirmation of that. I don't see any technical confirmation as of yet. This is still on a daily time frame, still quite clearly in an uptrend. I'd want to see at the very least this level give way, this swing point right here before I even consider looking at dollar shorts myself. Okay, so there you have it. I really like the pound on pullbacks, and I think sterling yen might be a reasonable opportunity provided the right chart setup materializes. Now, the only tricky thing, right, is that we're entering into resistance here. So I wouldn't be pulling the trigger immediately, but if overnight we get a little pullback, a little corrective sequence, that's what I'd be looking to capitalize on. And you can see here, I do have a final upside target in sterling yen for around 176 or so. So keep an eye on that. And that's what I've got for you guys in terms of possible trades. So in conclusion, like I said, retail sales data coming out tomorrow morning. Volatility remains high. And as always, please focus on proper position sizing. Volatile markets means, you could see a couple hundred pip movements in either direction very quickly, just like we saw today. And you don't want to be caught on the wrong end of that kind of whipsaw. So please, position sizing, keep that in mind. And of course, always follow your trading plan. Thanks, guys. I'll see you soon.